And so we were consolidating in what I believe was an A wave, followed by a complex correction, B wave, right? Probably double or most likely triple three, W, X, Y, X, Z. Doesn't matter though. We're in a clear channel, right? And we clearly broke it to the downside. We wicked to the upside momentarily, but clearly broke it to the downside. And that's where we're at now, right? Bitcoin is kind of retesting the bottom, right? I don't know that we're going to hit the bottom trend line, but think of this as a retest after a break, okay? And the next move, in my estimation, is a big move to the downside. So hello, everyone. My name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is February 11th, 2022, and Bitcoin looks like it's ready to go down to 39K. It looks like it's targeting 39K. I have 3 reasons why that's highly probable. If that interests you, then watch until the very end. Hope you're having a great day wherever you are. What happened yesterday? What's been happening for the past, let's see, for the past 14, 15 hours, Bitcoin has been in correction, okay? It's been in a complex WXY correction, right? According to Elliott wave theory, it's likely that we're in a 2-wave correction, and this 2-wave correction happened after we broke our descending support line, okay? This channel, I said, was very important, and this support line was very important because once we break it violently, okay? And the violent part has yet to come. The violent part is likely to come right after this 2-wave correction is complete, okay? And so we were consolidating in what I believe was an A wave, followed by a complex correction, B wave, right? Probably double or most likely triple three, W, X, Y, X, Z. Doesn't matter though. We're in a clear channel, right? And we clearly broke it to the downside. We wicked to the upside momentarily, but clearly broke it to the downside. And that's where we're at now, right? Bitcoin is kind of retesting the bottom, right? I don't know that we're going to hit the bottom trend line, but think of this as a retest after a break, okay? And the next move, in my estimation, is a big move to the downside. So for those of you who subscribe to the channel, you most likely know the rudiments of Elliott wave theory, which state that the third wave doesn't have to be the longest wave, but it just can't be the shortest. However, the third Elliott wave is usually the longest of the Elliott waves, usually the most impulsive, and it's where you typically see a volume spike, okay? If you use a volume indicator, you'll see a spike in activity there, okay? So far, what I'm seeing is that this was the first wave. This complex correction that we're in currently is the second wave, okay? And the minimum retracement of the second wave is the 382, okay? And let's finish this out in a second. But first, let me show you. Let's prove that Bitcoin is retraced to the minimal accepted retracement, which is the 382, okay, on average, right? And that has been met, right? So we're at the 382 Fibonacci, which is about 43,833. So at any moment now, it would be likely okay for Bitcoin to turn around and resume the trend, the impulsive trend to the downside. Now, why do I say 39K? There's 3 reasons. Let's put this third wave around 39K, and the fourth wave, let's put it up here at this line. And then the fifth wave, I feel like we're going to get an extended fifth wave. That's just my sense. But Let's just put it down here somewhere. It doesn't matter. Okay. Anyway, so the third wave, typically the first reason is in Elliott wave theory, on average, probabilistically, the third wave typically extends to between the 1618 and the 2 Fibonacci extension of the first wave. So if we take our Fibonacci extension tool for the distance of the first wave, retracement of the second wave, I believe the second wave's pretty much up, and I'll show you why in a second. We see that the 1618 to 2 is right at this level, right? Around 39 to 38K, okay? So that's the first reason. I think that wave 3 or the next stop for Bitcoin is 39K. The second reason is using simple support and resistance, okay? So let's zoom out on the hourly time frame, and we are on our log scale as we should be because we're using this support line right here. It's a support line because it was our 3 months resistance, 3 months diagonal resistance, and basically that plays from the all-time high where it started, the trend started, all the way down to 33,000, our low, our local low. So this is why I'm on the log scale. A lot of traders, or a lot of chartists rather, sometimes a lot of chartists ignore the log scale. Let me just say that, right? The log scale is a useful tool, and let's say I didn't use log for this, the analysis is completely different, okay? Log is important. It's important to know when to use log. I've seen in my analysis. Anyway, so we come down and we see that there is a structural support here on this pattern right here. Okay, whatever this pattern is, it's providing structural support right there, a neckline, if you will. In addition, there is double support with our 3-month resistance turn support right there. So you see the nexus of support at around 40K, between 40 and 39K. This is why I'm seeing our third wave ending at 39K. Okay, so that's the second reason. Okay, let's put that back. And the third reason, zooming back in on the 15-minute chart, is just simple pattern analysis. Okay, and what we can do is we see that we have a M top right here that's formed. Okay, it's kind of a head and shoulders, but you could say it's an M top as well. It doesn't really matter what you call it, but it's a bearish pattern. And let's get our little head and shoulders tool out. And so if you started around, let's start here. Let's say this is the left shoulder. This is the head. This is the highest point. Okay. And then this is the right shoulder that's forming right now. Okay. That's your kind of head and shoulders. Okay. It's an M top or head and shoulders, whatever you want to say. It's a bearish pattern. Okay. And the target for these bearish patterns is simply the top of the structure to the neckline, which is here, right? Superimposed from the point of breakout. So that would be here from the neckline. And the target of that is around 39.9. It's closer to 40K, but it is in that region, okay? So this is why I'm saying 39, 40K is, I believe, the next stop for Bitcoin to the downside, okay? I think we're in a downwards impulse. I think that this next move is going to be really impulsive, so I expect a 6 to 9% move, okay, imminent, right, if our downwards price action continues, which is likely to do so, okay? So that's what I'm seeing on Bitcoin, and that's why I'm seeing it. And very quickly, we can go to Litecoin and Ethereum just to corroborate our reads, and we see that Ethereum, similar to Bitcoin, has put in an impulse, right? We have an impulsive move right here. We can count 5 waves down, and we can count some sort of complex correction here, okay? And we didn't count the complex correction. It's not super important to get into the weeds and count every last complex correction, but it's good to do so just to get into the habit, because if you get these on a large time frame, you want to be able to count them. It's important to be able to at least recognize them for what they are, so you can make appropriate entries and exits and just know where you are in a trend, okay? And here we go. Here's our counting tool. Let's see. I said it was a double 3. Okay, so there's 2 types of complex corrections in Elliott wave theory, a double 3 and a triple 3. I'm not going to explain too much more. If you want to learn more about Elliott wave theory, I mean, you can look it up online, but the best is to find a good manual, like a good published book. And there's a link to a book that I love to use and I love to recommend. It's called Elliott Waves Made Simple. It's in the description. If you use that link, it supports the channel. Okay. So here is what I'm seeing. A W. I see all this 1, 2, 3 as an X, and then I see all this as the Y. Okay, that's the double 3 I'm counting. So if you go back into Ethereum, we see that you also have something similar, right? You have your W, 3-wave structure, X, 1, 2, 3, 3-wave structure, and then Y. Boom, impulsive structure. Yeah. So that's what I'm seeing in Ethereum, right? And that's against the trend of this impulsive wave down. There's 5 waves down. I'm counting here just really quickly. 1, 2, 3, 4, 5, something like that. Okay. And then in Litecoin, and why do we look at Ethereum and Litecoin? Once again, I'm looking at Ethereum and Litecoin because they're top 10 coins with large market dominance, i.e. they comprise a large percentage of the crypto markets, right? A lot of trading in crypto happens in Litecoin and Ethereum, so their charts give me a good idea as to what the entire crypto markets are doing, just like why we look at Bitcoin as a proxy for the cryptocurrency markets at large. Same reasoning, okay? And so, yeah, here I see 5 waves down, so I know we're in impulsive price action, okay? And I see a complex correction. So if this is the first impulsive price movement, the first correction of this kind is going to be wave 2, right? So W, again, X is a 3-wave structure, 1, 2, 3 to the downside, and then Y to the upside. It's what I'm seeing across the board. All right, so that's pretty much it from me. Like the video if you appreciate sound technical analysis a la Elliott wave theory, sound pattern analysis, sound support and resistance analysis, sound technical analysis. Not one mention of what the Fed's doing, not one mention of how Jerome Powell sneezed. Right, this is all technical analysis, simply using what's in the charts. That's what technical analysis is. Like the video if you appreciate that. Subscribe to the video if you have yet to subscribe, and share the video with others who you think may also appreciate this kind of work. And I'll see you guys tomorrow. Trade safe. Bye.